Hey traders, welcome to the Top Tier Outlook. Happy Sunday evening, everybody. We're taking an early look at what's going on with the markets as they are opening for this week, the week of October 21st. We have a few things to keep in mind this week. A lot of FOMC speak. Now, we don't have an FOMC meeting this month. So it appears that they're all going to be speaking. It was pretty active last week as well. And here they are. We've got 3 FOMC speaking engagements. 4 on Monday alone. Another one on Tuesday, along with ECB President Lagarde. So keep an eye on movement in the US dollar. In treasuries, Bank of Canada is on Wednesday. Now, second to the ECB in terms of central bank impact. Is the Bank of Japan as important as it was the last few months? Probably not as much. But in terms of what I've been paying attention to, obviously Bank of Japan has even now eclipsed the ECB as an important central bank. But those 3 are really important: Bank of Japan, European Central Bank, and the Bank of Canada. That's coming up on Wednesday. All right, moving on into Thursday, a little bit more FOMC speak on Thursday, and not a lot of data in terms of major data. So let's look at the calendar aside from all the central bank events. What's the kind of data that we're looking at now that the U.S. central bank has started cutting rates? It's really shifted away from this reliance on what is PCE and what is CPI and what's the inflation trajectory. Now that rate cuts have started, well, we accept, the Federal Reserve has accepted, and this is kind of their victory lap. We're cutting rates. So unless there's a significant move in the PCE, their preferred metric, or the CPI, a little bit more like the real world, unless there's a significant move there, I wouldn't be too concerned. And that then shifts now some attention to what's the health of the consumer. Do they have a job, and are they spending the money? So retail sales, new home sales, pending home sales become a lot more important. And we continue to keep an eye on unemployment itself, non-farm payroll, JOLTS, initial claims, challenger, jobless claims. So there's a lot of data from the employment side and the way in which the consumer is spending their money that is now sort of taken front and center. So that's the way that we're focusing on data now, and we're not lacking for any of that. We have retail sales this week, pending and existing home sales this week. So we'll keep an eye on that. All right, let's get to the charts. A lot of what we continue to focus on is very much to the long side. I know, shocking. Rag, you're bullish. Shay, it isn't so. I'm absolutely bullish. And it's not enough to say I'm bullish. We want to talk about, what are we in? So let's see. Bear with me here. Let me open up the recap. So this is the recap that goes out to the Sector Secrets Mastery members. Every entry, every exit, every day, right? What do we have? We have going into tomorrow, we're long the SPY. I'm going to have to get out of it at some point tomorrow because these are October 21 expiring options. But it's not enough to say I'm bullish. What are you in, Rag? I'm long SPY. I'm long NVIDIA. We're long PayPal. We closed out Basic Materials, Cisco, and GLD last week, not because I still don't like those names, but because those were October 18 expiration. So it's, again, if you look at the positions that a trader or frankly an investor has, then this is what they're thinking, because that should map to what they're doing. This is the analysis. We're long. Do I want more long positions? Absolutely. And then the question becomes, well, where do we want these long positions? So let's take a peek at what's going on with the broader averages as they're trading this morning. Up a little bit. Now, where we are on Sunday evening at 6:06 p.m. Eastern, now here on the East Coast, does not mean this is where we'll be at 9:30 a.m. tomorrow, but it is good to see that we closed at 20,484 and a quarter on Friday, and we're opening here, as you can see, a little bit higher at 20,496. And I'd love to see this thing stay above the major psychological level of 20,500. That would be great. That would be excellent. Major psychological level breakout, or not even breakout, but resistance level broken to show that there's some buying interest above this level. We'd like to see that buying interest continue. The other thing is the S&P. If I'm looking at S&P to the long side, I want to see the same thing. I would love to see tomorrow that we're trading above, most importantly, 5915.5. I'd like to get above 5916 ideally, but the high was 5915.5. Love to see us above that level. That takes out Friday's high. And that would be another level that likely, if we were to break, we'd run some stops and we would continue to move higher. One of my mentors used to say the market moves in the direction of the most stops, which is not to say that the market is some sort of insidious heartbreak, out to get you machine. It's not. The market, think about how market participants make money and get into trades. They're two different things. There is a group of market participants that sole job is to match orders, and they get paid by matching orders. That's just the mechanics of being a market maker. It's not always about a net long or a net short, right? That's not always the case. So let's dive into this chart here a little bit more of the S&P. If I'm thinking about where overall, zoom in a little bit. See that high on Friday, 5915? That tells me that at that point, when matching orders, there was no reason for levels at, say, 5916 to execute. Nobody wanted to sell there. Nobody wanted to buy there. And that's it. We ran out of interest to the long side at 5915.5. All right. So it can be just that simple. We don't have to make everything so diabolical and convoluted. Sometimes it's just a matter of nobody wanted to do anything up there. So it's really in our interest to find levels where traders want to do something. Let's take that same idea over to the NASDAQ. It's going to be really important as we break higher through 20,005, call it 30, that not only are people willing to sell what they have, that there are people willing to buy it. The market is an order matching machine. That's one way people get paid. They get a commission. They sometimes even get a spread, right, when they match the order. The other part of this is actual speculation, right? Speculation, therefore, means I'm not making money by filling an order. Speculation is what I'm trying to do is capitalize on follow through. So if I'm trying to capitalize on follow through, what's the idea here? I have to buy a level from which we can move up and I can take profit off the table. That might seem very basic, but for me, that means finding a place where, let's go back to that ES, because I have a long position in the SPY based on the ES. So when I look at the ES, the whole idea is to take advantage of a move down to support, where as we get there, the buyers will be the floor, they'll be the demand, and the sellers won't be able to break that because of any number of levels. It could be volume, it could be volatility, it could be price. So if I'm looking at a level like that, I want to buy calls based on the idea that we won't continue to run stops lower, that more orders won't be matched down there because there's just no interest to do so. And then I'll look for continuation of what has been bullish price action, because it does seem that orders are willing to be filled. People are willing to sell, people are willing to buy up at those higher highs. And always think about that. Think about everything as a matching, because that's what the markets are. They're a matching machine. So if stops are being run, it's just that orders are being filled there. It's an order matching and order filling machine. And if you get caught up in that, right, it could feel that it's out to get you, but really you might just be caught up in wherever the action is. So we want to think about where could the action be, who's going to possibly tilt that scale in their favor. And if the overall market has been, in this case, the S&P moving higher, it's going to be easier to tilt it in the favor of the bulls, right? All right. So those are things that we take a look at. Now, if the S&P is moving higher, right, the next thing we want to do, and I did a really, Sean, I did a huge deep dive on this in Friday's free video. So definitely you want to check that out at the Simpler Trading YouTube channel. But if I'm looking at sectors that are going to tag along with the, say, S&P or the Dow, I'm going to look at the sectors that are heavily weighted within each And you can start off with the US sectors. And if you want to add some of the industries like metals and mining, gold miners, home builders, oil services, you can add regional banks. That's going to be a look at what's going on with the IWM. You could add semiconductors to that mix, right? There's a lot you could add. I would not be particularly concerned with real estate, staples, or even utilities when it comes to understanding what the indices are going to do, unless you want to see whether or not there's still interest in defensives from a standpoint of flow going into places that would benefit from concern in the indices. But this is a pretty good look at what I would focus on. And it's pretty easy to see what's lagging: consumer discretionary, healthcare, and oil and services. When you think about where consumer discretionary affects the indices, that's the NASDAQ. Healthcare, that's the Dow and the S&P, and oil services, I kind of make that more of a Dow, maybe S&P type sector. So that's really it. It's the same conversation we had on Friday, which is to say, if there's certain sectors outperforming, right? If there are certain sectors outperforming, what indices benefit? Or if there are certain indices that are up, what sectors ideally should be going along with it? Now, not all sectors will. So one of the things that I did on Friday's video was I backed out all these sectors. So I blanked everything out, said, all right, what are the sectors that are within the S&P? And it's 4. So 3 of these 4 sectors are up: financials, energy, tech. The laggard is healthcare. So when you take a look at it from that point of view, it really starts to make a lot more sense. The more of those sectors that are participating, the more of them that are up above the 0 line month to date, the more, if you will, cylinders are firing within the engine of that index. And that's a really easy way to look at it, right? In that regard. Okay, next question is, there are a lot of correction warnings, 5% to 10% out there. Do I anticipate any? Well, Sean, since you asked, let's answer this in a way that hopefully resonates, right? All right. So first of all, does anyone here think that anyone on television, including anyone on YouTube, like this person here, knows what's going to happen tomorrow or the day after or the day after or the day after? Does anyone? So when we anticipate, what's the trade, right? So Sean, let's say I said, yes, we could correct 5 to 10%. And what do we do then? Short? Buy? Right? So I guess, and I mean this sincerely, Sean, who cares? I really mean that. Who cares? Remember that financial media is going to talk about things to keep you tuned in, right? So if someone says we're anticipating a 5 to 10% correction, what's the next sentence? Oh, guest who clearly can see the future, what are your positions? Like, what are you going to do to make money in this environment? Now, also, I think what's really, really important is I'm a trader. I'm either day trading, so I'm in trades for a couple of hours. I'm either swing trading with a shorter term time horizon of maybe 1 to 3 days, or maybe I'm longer term swing trading for 2 to 10 days to maybe expiration, right? So then the next question, if that were even something that's answerable, clue, it's not, right? Newsflash. What's the time horizon? When could that happen, right? So what is our job? What is it that we're trying to do? So Sean, this is a really easy way to differentiate people who are managing money with a longer term time horizon, right? Or folks who are traders, right? I'm a trader. So sitting more on cash. So again, I think these are, Sean, I'm sure there are other people who spend a lot of time thinking about those things. I'm going to tell you this straight up. Don't worry about it. Don't even tax one more brain cell on those kinds of questions, because A, they're unanswerable, and B, I promise you, it's absolutely useless. I promise you. So what I mean by that is we should all have a little bit of cash. I don't think we are ever fully invested, right? I think I always want a little bit of cash. So I want to trade, raise, growth. I want to make some money trading. That trading goes into my investing bucket, and then my investing bucket gets deployed when certain stocks or ETFs reach the price level that I want them to reach. And then I buy those shares and I keep trading, keep making some cash, right? Then whatever I want to keep in that account to have a larger and larger trading account, great. But the overflow, which I always like to have some overflow, goes into another bucket. That's my investment bucket. And then once again, I can use that to buy shares when the stocks and the ETFs reach my price. The biggest thing is most trading people who call themselves traders, they don't actually know what it is that their goal to grow their account is. So Warren Buffett knows his job. Is he a short-term guy? No. I'm sure they're in and out of some things sometimes. They're writing premium sometimes in order to raise cash to buy something. There's a lot of things that Warren Buffett and Berkshire Hathaway does with options, right? But if I don't know what it is that my goal is and the time frame and time horizon I use to get there, then those kinds of things are really easy to start consuming my attention. The bottom line is nobody knows if we're going to get a pullback to that degree. So let me put another indicator on here, because I think you're not alone in this question, my friend. And then I think this is very much why most retail traders and investors lose, because they're getting swayed by conversations on television that aren't in any way instructive or helpful. Nobody knows when, by the way, when it comes to pullbacks, did anyone know that a Fed member was going to basically go rogue in April? Was that something we were worried about? Never even came up. We had 3 really great months, great Q1. One or two Fed members went very rogue. They started getting hawkish, pullback. Nobody was talking about the pullback before then. Then we had the pullback with the Japan crisis, the yen and the carry, right? Boom. Nobody was talking about, right? So also remember that the more discussion there is about a pullback, the less likely it is to happen. They seldom happen when everyone's talking about it. That's just the nature of a pullback, because we're discounting for it with the hesitation of buying things to the upside. But, if folks are calling for what's your number, 5 to 10%? So they're expecting the S&P to go to 5630, which is down in here, or maybe 5334 off the high of 5927, right? That's the high. That would represent a 5 or 10% pullback. So then my question is, well, how many places on the way back down could I buy from? Which is what I've been doing, right? That's why I've been growing accounts, buying dips. So if a dip is going to bring me maybe to 58 and change, right? That might be a 1-2% move, not even a 3% move. I'd be buying a 1 to 2% pullback on the S&P. To get down there, we'd have to not only break the mean reversion, right? We'd have to keep going below that to lows that would mimic what was happening with the September weakness. Not that it couldn't happen, it sure could, but nobody knows when they're going to happen, right? And then the same folks that are picking tops, well, they don't want to pick a bottom. So if that's going to happen, here's what I tell you. Okay, Rog, you tell me not to worry about it, but I do. What can I do to find something useful to do with this concern I have? Because that's all that it is, right? It's a concern. What I then do is start going over to weekly time frames. This is the fun part, Sean. Start building a watch list, a wish list even, of those stocks you would buy if their pullbacks of, what was the number? 5 to 10% led you to a level of either a weekly mean reversion or any level above the 200 exponential moving average. So if there is going to be a major pullback, if there is, put a wish list together. Put a list of names that if they were to pull back, like for example, NVIDIA. And we're long NVIDIA right now. I hope it goes to the moon. But what if it doesn't? What if it pulls back? So this is where I'd say to myself, okay, what would a 5 to 10% pullback on NVIDIA from the current 140.89 high be? 5% would be 133, 10% would be 126. 133 to 126 would bring me to about, not that much, actually. Not all that much. So ask yourself, if I had a pullback to 110, 109, do I have a plan to buy? Do I have an alert? Do I have a limit order? So for when folks say, Rog, I'm concerned about a pullback, what I'll say is the best thing to do is find those names that if they went on sale, which is what a 5 to 10% pullback really would be, if they went on sale, Do you have a plan to buy them? So if prices move down to 133, which isn't really all that much, if price moved down to 126, would you buy NVIDIA? Right? That's a 10% pullback. So that's where we can take a concern and actually now make it practical and usable. So if this thing were to occur, I have a plan for it. And that's, I know that's a kind of a long conversation about a question like that, but I think it's one that we're plagued with all the time because of the absolute nonsense that's run on television constantly. And it is nonsense, right? Because these folks are never going to be telling us what's going to happen tomorrow because nobody can, right? As far as XLK goes, Mike, yeah, as far as XLK goes, yeah, I think the best thing to do with XLK would be focusing on the strongest symbols within that group. So we'll wrap it up here. All right. And by the way, the same folks that are always warning about those drops never talk about where to buy the dip, do they? Because that's not that as interesting, is it? It's not as fear-mongering, is it? Please remember, gang, the things that you hear most people worrying about can't be the things that you're worrying about. I promise you, Warren Buffett is not worrying about a 5 to 10% pullback. What is our goal? Are we investors or traders? Sort that out first. And then go find the habits of people who do this well. I promise you're not going to find many of them on television, but yet they're the ones that are going to talk about it. Find the things that if we were to pull back, will go on sale. So let's talk about the sales we could see in XLK. NVIDIA, Apple, AVGO, Salesforce, Oracle, Cisco. We just got out of Cisco last week. There are a lot of names I like in XLK. I don't like XLK itself, Mike, because Apple and Microsoft continue to be, of the top three, just sort of a mess. Microsoft is a leave it alone, right? It's one of the only ones other than Adobe that are in the beware camp. I'd keep an eye on it. Some of the relative outperformers within it, I wouldn't really concern myself with the sector itself. I think there are some much better names in that group. All right. So that is what we've got there, gang. As always, thank you for bringing your questions in. The whole idea of trading and investing, gang, is to find things that have the probability of follow through. Now, if concern about certain kinds of events, elections, or earnings, if those are concerns, flip that around. Don't consider it a concern. Look at it as a potential opportunity, right? I don't think for 1 second when, for example, look at 2008, Buffett picked up how much of Goldman Sachs? Yeah, he knew there was something dramatic going on. He took what was a problem in the broader markets and said, where's the opportunity? So that's whenever I hear those kinds of things, I always think, all right, it's a concern to some folks. Why is it a concern? Because they don't have a plan. Rob, be different. Have a plan. If that event were to happen, this is my plan. These are the names I want to buy. This is the wish list, right? Everyone else wants to do what? Hedge, panic, short, whatever it is. Call the bottom, call the top. Anytime there's an event that has some kind of uncertainty, inject some certainty by saying, this is my watch list. If that event were to happen, and this is where I want to buy those things. Because when you step back, and I think maybe this is where this image is probably very, very apropos. All right. There is a direction that the broader averages typically move. There's a chart going all the way back to 1985. There is a direction the broader averages typically move. There's always a reason to sell, right? But look at how many opportunities were on the heels of every one of those. That's the way I look at opportunity. That sales are that blue light special at Kmart that I remember seeing when I grew up. All right, gang. Hope that helps. I'll see y'all tomorrow for Charts and Coffee.